The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This will be my last show of the week, believe it or not, because it's Friday. Next week, I will be off. I'm going to do some much-needed resting, and I'll be following you back on the 9th, Monday the 9th of May. I'll be counting all of my money from the Kentucky Derby. Always like to see that the first Saturday in May. My last winner was, I believe, 1997, and the one before that was 1987, and as they say in the trade, the boy is due. So we'll see what's happening. I can't give my winner this week because I'll be off the air, but I might just send it in through one of the other folks here at CNBC, or TFNN, and you can scratch off that one along with the other horses. Okay, let's get to the markets. I did get a note from Norm Winsky. He would like to be on May the 5th, so I'm going to work that out, whoever takes my place next week. He's got some great information, as always. He'd also like to apologize because when Mercury went retrograde yesterday, it was actually 55 minutes off from when the market really started to break. I don't know if that's going to the case. Duffy, you ask an interesting question. Which planet controls prices or horses? Actually, a horse has its own birth sign, and there are people that actually bet on horses on how their birth signs go. I mean, I know that seems hard to believe, but I don't know what their success rate is or anything, but there are people that actually do that because horses have the same, birth charts that we do. They're probably just larger charts, I would guess, but I still don't understand it, but that's neither here nor there. We've got a lot of things, a lot of things going on in the markets, folks. The main ones to look at, I believe, which I think is it's going to affect a whole lot of people, and that is this Japanese yen carry trade that we had with the yen and the dollar. We've been talking about this for a very long time. This is what got me in trouble in the gold. Well, not in trouble because I actually, once gold got above 1244, I was expecting it to come down to 1190. That would be the equivalent to what we're looking here, the same chart, but it didn't do that. And now gold is making a 3 drive to a top pattern on a 4-hour chart, and I certainly can't buy that one, but we'll be watching it for a buy, of course. But this one is really interesting because we did break below 107 last night. We got to 106.80. The exact number here is 106.54. So keep an eye on that. That's a really big number. That goes back a long time. There's only been 2 38% retracements in this whole bull market that's been going on for 5 years. The first one was in 2013, and now we've got another one now. So we need to watch this closely because it's going to be very, very interesting. Something has happened in Japan. There's been a change in the continuity of thought. I don't know if the boys there have called uncle on their, their negative interest rates or not, but that is certainly not a very, very good situation that we have going now. If we look at the Japan market, and the reason why I'm spending some time here on Japan is that we're looking at a market that's been incredibly bearish all of last year and the year before. So during 14 and 15, it was bearish, and look what's happened this year. We bottomed in February. We had a 3-month rally into April, stopping at the 50% retracement of point C and 38% retracement of point A. And look what's happened this week. We're down 8%. little more than 8% in 1 week, 7% in 1 day. So this has been a really, really tumultuous move down. And usually when you have wide range like that, they continue. So this is going to be very interesting what happened there, because remember, these folks are the instigators of negative interest rates, and that could be something that really makes things going back to the Marshall. I don't know how you do that, buddy. you've got nerves of steel, and Marshall was just telling us that he sold the 1284.30, and he's risking $4 on the gold. I like to trade, but I couldn't recommend that for anybody, because it's no riskier than any other trade, because you're only risking $4. But the pattern is certainly there, and we have the same pattern in the crude oil too. So both of them are lining up. But it's a Friday, and I wouldn't test it, but I certainly am not in the gold or the silver. Silver made the 1.27 expansion. We had the old high at 1772, and we did get up to 18 and change, which was the 127 level of that level. Whether that means anything, I'm not sure, but we are over these pretty strong cycle things. It could cause some of this stuff to shake out, but and I haven't had a chance to check the open interest in the gold and silver from yesterday, which I'll certainly do that over the weekend. I'll still be doing the newsletter, and I'll still be doing my daily charts and my videos and stuff like that. It's just I'm taking a break from the radio show, because it takes me a good 2 hours to get ready for this thing, and I'm just getting a little bit too tired, so I need to rest. I'm not a young whippersnapper anymore. I realize I'm in the 7.5 furlongs in an 8 furlong race, so I've got to, manage my energy a little bit better. Someone's asked to talk about actually a little bit better than that, Duff. Hold on 1 second here. Let me pull up the crude oil, because I had it up there, and I'll put it up again, and you'll be able to take a look at it. This comes from one of our experienced crude oil traders over in Athens, Greece. And as you can see, over the past 3 weeks, we've made a beautiful 3-drive pattern there. We have 2 ABCD patterns forming up here at this 46. I thought it was going to stop around 45.70. We actually went about 80 cents higher than that. So we're in this ballpark here where we should get ready for a turn down in crude oil. But that's the pattern that we're looking at. In that, the pattern in the gold, I will redo that one too, since someone's asked me to do that one, and you'll see. Fact is, let me do it the way that I wanted to go through this. Shucks, hold on 1 second. Where is it? Here it is. There we go. I put these in a file. I'm able to do this a little faster now, which is actually pretty good. All right. As you can see here, the 127 expansion up there was at 1284.40. It hasn't gotten above there yet. That doesn't mean that it can't, but anything above that means it's going to make new highs. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the NASDAQ today, and then also we'll talk a little bit about the S&P here. But if you'll notice in the NASDAQ, over this past month or so, it's been lagging the market by just a little bit, is probably the understatement of the year, given the fact that we've had so much going on. By the way, those of you that got my memo on buying the Amazon calls on Thursday before the report came out, be sure to send me my my check. Because it's going to be up, I think, 14% today? Unbelievable. Okay, anyway, let's look at the NASDAQ here. We have a situation where we've got two major ABCD patterns coming in here at the 4340 level. And that's pretty important. That if you look at the ratios there, at the bottom of the page, you'll see that 1.618 expansion ratio down there. Folks, if we go below that, that's a game changer. In fact, I think the game's already changed. They just haven't told the other players yet. But that's what it looks like to me. If we look at this NASDAQ on a longer term basis, it's real difficult to buy this thing. And that's because of the fact that, we're looking at a situation where we could, easily, drop another 200 points in the NASDAQ because this is a very nice head and shoulders pattern. It's very symmetrical, and it looks like this is what's really happening. So we'll watch these one at a time. Yesterday, when we were on the air, we were talking about Facebook, and one of the reasons that Facebook, they were on the news yesterday, and I actually could not believe the things that I was hearing from some of these people on CNBC. They were promoting Facebook almost like it was a new religion, like something had happened that everything was going to be related to Facebook out in the future. I was shocked to hear it, and it was really just really amazing. And then I heard that they pay $12 million a year for security around Mark Zuckerberg. Boy, I think that's a lot of money. Of course, we pay a lot more for our president. We probably play 120 million for him. But I was really shocked to hear those figures also. But whenever I hear that kind of stuff, I said, well, you got to think just a little bit logical. And so what I was looking at was we took out the high of Facebook, on the high basis. We hit a high print yesterday of 120.89, and when we were looking at it, it was 115.40 or something like that. The low of the day had been 118.50, and I said if it goes below that, it's worth a short sale because you only have to risk $2, which would be if it made a new high, you would certainly be wrong. And, it dropped, about $2 a share. It's still going to be under that price early this morning, but I still think that would be a thing to do. Let's go back and look what Apple did. Folks, do you remember how Apple used to have all the free press and it was on the news every day, and they kept telling everybody to buy it and buy it and buy it and buy it. And everybody that bought it for the whole year was losing. And this is the stuff that these things happen on TV, that they get involved with this. I'm sure we do too here, but that's really what you have to do is you've got to pay a little bit of close attention to some common sense. That's basically it. So be careful. Anyway, I just hope that helps because and I'm not in that chart in that trade either. I'm just telling you that that's what I see from a common sense point of view. But maybe these things go up forever like they did in 2000, but we're not in the same kind of environment like we had in 2000, folks. That's not there anymore. There's a totally different thing going on here with the NASDAQ, leading the market down. Remember, it led the market up, and it's leading the market down. Someone's asked me a question about the gold trade and how I related it to the trade in the Japanese yen, and I will show it to you right here. This is the one that got, I was very bullish this stuff down there at, 1070, as you all well know. I unfortunately, well, it's not unfortunate. It's only $40 away from where we exited, but unfortunately 1244 is where I took the profit. And then what I'm looking at now was a potential for this to come down and touch that 21 line. And that's what the Japanese yen has done. It's gone down. The yen dollar, with that strength that had yesterday, has taken it right down to that line. This is really a really important line because anything below that is going to be a really big game changer from a foreign currency standpoint in that particular cross rate. So we have to pay a great deal of attention. Now, the head and shoulders pattern that I was looking at here in the gold is that we're looking at the area where I thought it was going to stop, which was around 1272. And of course, we went back and we made 1284. And that doesn't mean we can't go higher, because if we break out of that head and shoulders pattern, it's going to go up and probably make a new high right above 1300. And that would be a 3-drive pattern. But, you want to get ready to buy the retracements, folks, because this thing looks like it's off to the races. I mean, if you look at that XAU, the gold stock thing, I mean, the thing's up 13 weeks. That in itself is an outlier event, but I've never had much luck buying things that are up 13 weeks or selling things that are down 13 weeks. But as Jesse Livermore said in his book, he said, don't be afraid of paying high prices, folks. They're there for a reason. And the same thing is true of what's going on. I've been asked to post that yen chart again, and I'll be happy to do that for our good friend in Atlanta, if you'll give me 1 second. And I want to congratulate you folks on beating the Boston Celtics in the playoffs. Don't watch that stuff anymore. Ever since Larry Bird has left the picture, I really don't follow too much basketball. I might watch 2 or 3 minutes of the game, and that's pretty much it. Okay, that's the Japanese yen that we're looking at. You can see the relationship. The pattern is very similar to the gold. The difference is the yen made it, and the gold just kept going higher. So we'll keep an eye on that. Okay, let's get back to the stock market here. I've got plenty of time to do all this, so I should slow down a bit. We talked about the NASDAQ at that 4340 level. That's going to be very, very important today. We're Friday, and it's going to be a down week, surprisingly, because the market gave up, just about. What was so funny yesterday is the fact that the market was not funny, but the market gave up 20 handles. And I say this all the time, any market that can give you 20 handles can take 20 handles away from you. And that's exactly what happened. We went all the way down, all the way back up, and then back down again. I've seen this happen many times throughout my years of trading, that it doesn't violate the breakout of the 61% retracement at 2093, and now we're starting to move the thing down to the downside is what it looks like. So we'll keep an eye on that. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to go jump across the pond here and go look at the European market. We'll take a look at the German DAX. As you can see, it also gapped down today. It has not taken out the 78% retracement of the previous day's low. That was down around 10,160. and at least not so far. It's not very far away, so it could certainly do that. But there's been no panic anywhere. I mean, there's just nothing like this going on. One of our listeners sent me a very interesting article from Chris Carolyn about the potential for the things that were happening in the market for a potential crash based on lunar things. These are similar things that we've talked about with Bill Meridian from Cycles Research in Vienna, Austria. He's also been able to do that. And then remember, Shane Smolian has been saying all along that we're looking for a pretty nasty move down into May. He alerted to that 2 weeks ago when he was on the air, and that was based on his cycle work that related to the speed of the planets and some of the other, sophisticated things that he uses. So there's quite a bit, looking that we might be heading down here. But each time we've done this and hit this major support, we've always snapped back. This is why it's so important where we are now, because if we go beyond that 1.618 level in the NASDAQ, which is down around that 4340, there's very little support. As a matter of fact, the Chapman wave, the next one after that is 4310, which is well, that's not too far away. That's only 30 points away from that. So we got to watch that 4310 level, very, very closely. Also, that will be a 38% retracement on that head and shoulders pattern that we're watching. So this is going to be it's going to be an interesting week coming up for sure. And then, so it will be fun to see how it unfolds, and we'll just wait to see how it happens. Remember, we do have one key Bradley date coming in around May the 5th, and Norm Winsky will be on hopefully that day. I'll set it up with Leanna to get him on as a guest, because he does have some really good, cycle stuff that works, very, very well. We want to watch it closely all the time. Most of this stuff has been precipitated. Well, that's a big word for someone from Indiana to use. Precipitated by what I think, those major patterns that we had finishing at the end of last week that we talked about earlier in the week, primarily the big ABCD pattern that we had in the Dow Jones, and the fact that we had that smaller ABCD pattern in the NASDAQ, and then we also had the declining tops pattern in the New York Stock Exchange Index. And that New York Stock Exchange Index, remember, made a 71% retracement of the high from May 19th. Now, if we go back to 2007, after the high was made, we rallied back 65% before we, fell out of bed. So we got to be really careful in here, folks, because of the fact that we do have Mercury retrograde, which that throws a wrench into most things, because astrologers say that you shouldn't make many decisions during that time. But if you're a trader, you got to make decisions every day. What you've got to be aware of the fact that you want to make sure that you plan your trades even better during the time when Mercury is in retrograde motion. I believe it's going to be for about 3 or 4 weeks this time, so we'll see how that lines up. But remember, it's just a guideline, and we'll just see what's happening. So we will take a look here at the market's opening. Let's just take a quick look so we can see where we are. We've actually, the actual level on the S&P, it hit it pre-market. That 786 retracement was 2062, and we've hit that. We've rallied about 4 points, so far, and so it's interesting, where we are at this level right now. We've, crude oil is starting to, pick up a little bit also, and gold has made a new high by about 30 cents, so that's interesting too on the opening. A lot of this stuff is related, to the opening of the New York Stock Exchange. I want to check, 1 second please, I want to check the price of Amazon just to see how much they sent this puppy up on the opening this morning. I saw it $70 higher. Oh, it actually didn't open as much as actually it was down about $15 from its overnight low. Let's double check Facebook to see if it took out the that level we were looking at, which was at 18. 118.50, and that is trading at 117.27. So that hasn't really done very much either. So we'll just keep an eye. This is the early part of the morning, and people buy lower openings. So when you see a 4 or 5 point jump in the S&P on the opening, that really, you got to give it a little bit of time. That's a key level there. At 2062, if we take that out, there's not much below that, folks, because that's the big 786 number that we're watching. So let me double check one other thing, and that's the NASDAQ. I want to see how close we are. If we are coming down to that level at 43, well, let's call it 4,300. We'll just round it off, and we'll use part of Basil's Chapman wave along with these retracements that I'm looking at here. If I can just find it, there we go. And we'll put it up here, and we'll see it's trading at, wow, we're not very far away. We've had a low of 47. We're now at 55, so we're really close to that level of 43.35 or 43.40. Watch that very, very closely in here. So that's primarily what we're watching. As far as gaps are concerned, folks, we left a gap of 35 points in Amazon. If you go back and look at the Amazon chart, you'll see that it doesn't leave any gaps. So sometime in the next few weeks or so, we're going to drop at least 30 or 40 bucks into this gap area, unless this is the one that runs it, forever. And remember, they are promoting, Amazon or Facebook now as the new Apple and the new religion. You should hear it on CNBC. I literally was shocked when I heard these fellows talking, these panelists that they had on. And whenever I hear that stuff, I've been there, done that, and that's please let me in, and that's not the situation you want to get into. Frankly, I do not belong to Facebook, LinkedIn, any of those things. I don't believe that this is the way to go, and but that's just my opinion. Remember, I'm still not sure that microwave ovens are here to stay. I'm pretty sure that color TVs are here to stay, but microwave ovens, I'm still not sure. So when I tell you to be afraid of Facebook, remember where it comes from, okay, folks? That's the real key. Let's get to the currencies for a second. And in addition to the Japanese yen, having this big move, we're also having a pretty good move in the euro. It's also moved, to the 78% level. Above the 78% level. So that means that we're most probably going to be looking at this 114.60 level as a pretty good resistance.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're just seeing how the market's moving around to see what's going on with some of these things. We've had a relatively calm opening. We've had a bounce off the 786 at that 2062 in the S&P. So far, the NASDAQ has been down to 43.47. We want to watch this 43.40 to 43.10 level. That's going to be very important. That's the 38% retracement on that head and shoulders pattern that we looked at. But, you know, the fact that it made it the first week, boy, that's not usually a good sign, especially with the big downdraft that we're seeing here. If you stop and think, if we didn't get some of these earnings like LinkedIn and Gilead and some of the others and Amazon, Facebook, these things would really be going down. So we'll see what's happening. Okay, the next one that we want to watch from a longer term perspective, if we'll give me 1 second here, is the I wanted to do the S&P 500 on the cash basis to show you where we are. This is as of Friday, and of course we're going to have a down week. You'll see that the relationship that we had here was pretty much spot on, to what we were looking at here. So far the market has held up. Early Friday we did, like I mentioned, we hit that we hit the exact number in the DAX, and we also have done the same thing with our market so far. So right now there's really no panic going on, and actually the yen has moved about 50 pips away from that 20-man line already that we got down to 106.89. We've already rallied 50 pips off of that line, so there might be a stabilization coming in. But remember, any market that can take away 25 points from you can give back 25 points. So these things can move up and down, really moving. So watch that very, very closely. I would not be surprised to see, gold possibly even take out 1,300 today, because if it gets anywhere near that old high, which it doesn't take much to get above it, in fact, we're only $3 away right now, we could easily, pop through that level and, go a great deal higher. So those are the things that I'm looking at. As far as the commodity markets, we had a strong rally, not new highs or anything like that in corn and beans and wheat. So they're in a trading range right now. And remember, this is contra-seasonal to see this stuff going on. If you remember last May, on Memorial Day, we had a huge Gartley pattern finishing there along with the strong seasonal, and beans rallied, $1.50 off of that over a 2-week period, and then went down and made new lows. So we're planning a lot of stuff out there, folks. So it's all, there's got to be some crop problems in order for these prices to maintain themselves. One of my good farming buddies down in Vincennes, Indiana, that farms several thousand acres of beans and corn, has told me that he's taking advantage of this strength, to hedge his crops, because he makes really good money at $10 beans and $4 corn, and so he's willing to do that. Now he loses the chance. Of course, he uses the futures markets too, but he loses the chance of taking the old Texas hedge, where you're long the futures and long the cash. But that's not what the farming business is all about. The farming business is when you got a crop that you can hedge, take in the money and get the money from the bank, and then you have operating capital and you build your profits in, then you wait for the crop to come out. It doesn't make any difference what happens, because you've hedged your crops. Then you've got a really good chance of making some money. So there's going to be a lot of swings in all of these markets. We're starting to see really good volatility, even more and more. We've been seeing that ever since February the 8th. As a matter of fact, we started to see big volatility everywhere, and I believe we're going to continue to see that as quickly as we can. There we go. So now we're just getting down. We made new lows now in the NASDAQ. We're getting close to our number at 4340. We've made new lows now in the S&P, and we're almost making new highs in the gold. We're at 1286 and change, and we only got to go another couple of dollars there, and we will be off to the races. So this is going to be an interesting Friday, as always. So, and as I mentioned, this will be my last thing for next week. I'll be taking next week off, and we'll be going from looking. I think we've made a new high. No, the old high in the gold was 1287.80, and we are only we're only $1 away. So someone come in and do a little buying, and gold will be at new high ground without any trouble at all. So I only heard the one tick. My beeper went off one time at 43.42 in the NASDAQ, and didn't hear any more beeps since that time. So we're trying to find some type of a little bottom in here. We did make a new low in the S&P, but we're still within 1 point of the 786. So if it's really bad, it's going to start giving up pretty quickly here. In my opinion, and it looks bad on the charts now. When you look at it from where it was last week and where we are now, that's what it looks like. But that's neither here nor there. That doesn't mean it can't turn around and rally quite a bit from here. If we get above 2067, 5-point rally, now we're starting to make new lows now in the NASDAQ a little more frequently. So we're getting down near that 43.40 level. Very, very closely. So let's just take a quick look at it to make sure that we are in that ballpark of what we're looking at. And we're only about 10 points away now, folks. So watch this level really closely, because it's going to be interesting. It's going to be interesting to watch. And then also don't miss Basil Chapman's stuff, because he's very good with the Chapman wave, and we got Steve Rhodes in there. And then we also had John Logan giving us some nice spots to look at some of these things. So we'll watch it very, very closely. Asking why my voice became faint. It's probably weakness. I don't know. I really don't know why my voice would be faint. I try to coat my throat with vodka every morning. That seems to relieve any pain. Yes, there's definitely it's definitely partly of that, Duffy. There's no question about that. I don't change the mic, Tom. My mic is hooked right onto my headset, set right at the same place all the time. So I might have just been going to the. Oh, there we did. We just made a new high in the gold. So there, what's out. So very good. Well, Marshall, it was a good $3 to risk, my friend. So nothing wrong with that. Not a problem. Okay. All right, we're starting to weaken up here a little bit, and I think we're going to be, if I'm not talking into the mic, I must be in a different location, because I've got it on my head, and my mic is actually about 1 inch. I haven't changed anything. I don't know why my voice would be fading, but maybe it's something to do with the internet, but I'm not doing anything differently. Well, we're almost done here anyway, so we'll just go on and check the plug. I did all that. I haven't done anything different. Oh, it's technical stuff. Why should I be surprised? 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we have a caller from Florida. Bill, are you there?
Yes. Hi, Larry.
How are you? What can I do for you?
Quick question on the daily chart for the Dow and the S&P that you just showed. The retracement, the C retracement, is extremely deep on both those charts. Does that mean anything? Is there a significance to that?
The only thing, the significance that I can gain from it is that it's a perfect mirror image of what happened before. I mean, to the exact percentage. That just means that the market's repeating itself over and over again. And if we look at the Dow Jones, you have that perfect ABCD, but the S&P made a slightly lower low, as you remember, but the harmony is certainly there. You know, then when you look at the ABCD pattern in the Dow, and then if you look at the NASDAQ, what it did, and then if you look at what the New York Stock Exchange is doing, and that's the one that you really want to watch, it's making lower highs, and it has certainly verified that it's in a downtrend based on what we've done this week. So as long as we don't take out this week's highs, I think we're going to be going down, and probably very sharply.
Wow. Very good, Larry. Thank you.
I hope that helps, Bill, and thanks for calling
Very
in.
much. Take
You
care.
bet. Uh-huh. Okay, well, the market's down a little bit, starting the day here. We did hit 43.27 in the NASDAQ futures. We were looking for 43.30, and right now we're trading 43.36. It's a little early. We got the Dow down 100 points, and some of the Dow stocks are probably not even opened as yet. So just be very careful in here, folks, because we've made some type of a major pattern in these indices this week, especially with the action that we had yesterday, being down 140 and then being up on the day and then turning around and then dropping 222 points. It's really a round robin type day, and that means that there was some type of a cycle high hitting. And as you remember, we were watching for Mercury to be retrograde at 1:20 p.m. and the market started down about 55 minutes after that. So I'll see you on the 9th of May, God willing, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.